Well, hello and welcome to another video by Financial Learning. On today's video, I'm going to break down one of Mullen's latest PRs. This one has to do with a new shareholders' rights agreement. There's been a lot of questions, uncertainty around everything involved. I did do some digging. I read through it a couple times, and I'd like to just share with you all my understanding. So let's go ahead and get right into it. All right. So let's go ahead and get right into Mullen's PR, and then we'll break out into Mullen's 8K filing, as well as some of their exhibits to kind of really explain some of the details behind this PR. So start from the top. Mullen announces adoption of limited duration stockholder rights plan. So we do know based off of this and the filings that this is a 1 year from May 1st, 2024 through May 1st, 2025. So let's go ahead and talk a little bit about what it includes. If you read the bold section, this rights agreement is not a financing transaction, and no additional shares of common stock or preferred stock or warrants or convertible notes are currently being issued in connection with a rights agreement. So we'll talk a little bit about some of these new A1 series preferred, these junior preferred shares that have been added in, but none of those have been issued. So there's no current dilution going on in terms of new shares being added due to any of these things listed here. Preferred stock, warrants, convertible notes, or anything of that nature. So no SPA or anything like that. So again, this rights agreement is intended to promote the fair and equal treatment of all stockholders, and is similar to rights plans adopted by other publicly held companies. So going down in here, the board unanimously adopted this specific rights plan. And it's actually intended to help stockholders realize long-term value with their investment, and it's intended to protect Mullen and its stockholders from efforts by a single stockholder or group that would like to obtain control of the company without paying a control premium. So this doesn't stop a certain person or company from gaining control, but they would have to pay Mullen Automotive a significant amount of money. I don't believe that that amount of money has been disclosed, but that is written in here as a way to protect the shareholders, protect Mullen and the board, so that no one can come in here and basically perform a hostile takeover. There would be a significant premium that Mullen Automotive, the shareholders, and the board would all receive before any individual or group obtain controlling interest. So let's go ahead and read a little bit more about that interest. What we know that the rights agreement works by imposing a significant penalty upon any person or groups that acquires a beneficial ownership of 10% or more of shares of common stock without first getting prior approval of the board. And this rights plan is effective immediately and will expire on May 1st, 2025. Additional information was provided in an SEC filing. So let's go ahead and hop right into that. All right, so this is the 8K that was filed a little bit after that PR came out by Mullen. So the first section is different, and then once you start to get into the bold section, that was actually shared as part of the PR, so I'm not going to really go over that, but I will start at the top of this entry into a material definitive agreement. It says on May 1st, 2024, the board of directors of Mullen Automotive declared a dividend distribution of one right, and then a right is in parentheses, for each outstanding share of common stock per value 0.001 per share of the company common stock, and preferred stock, again, par value 0.001 per share of the company's preferred stock. The dividend is payable to holders of record as of the close of business on May 13th, 2024. That is the record date. In connection with the distribution rights, the company entered into a rights agreement between the company and Continental Stock Transfer and Trust Company as their rights agent. And then this other section, I'm not going to read through the rest. This is part of the PR I already mentioned on the previous slide. Let's go ahead and get into some more of the details. We're going to look at some of the additional exhibits. So before we get into the exhibits, just wanted to go a little bit further down into the 8K. We're talking about the issuance of rights. Each holder of a common stock and preferred stock, as of that record date of May 13th, 2024, would receive a dividend of 1 right per share of common stock and preferred stock, as applicable. It says 1 right will also be issued together with each share of common stock and each share of preferred stock, the terms of which provide for holders thereof to be issued rights issued by the company after the record date and prior to the distribution date, as defined below, and in certain circumstances after the distribution date. New certificates for common stock and preferred stock issued after the record date will contain a notation incorporating the rights agreement by reference. So again, a couple of things here has to do with the record date, but then there's also a distribution date. So let's see if they talk a little bit about that as we keep going through. So the rights will not be exercisable until this distribution date. The rights will be evidenced by the certificates for common stock and preferred stock, and the rights will be transferable by and only in connection with the transfer of common stock and preferred stock. So the only way to get these rights is to actually own the common stock or the preferred stock. And then in terms of the distribution date and the beneficial ownership, the rights are not exercisable until this distribution date. As of and after the distribution date, the rights will separate from the common stock and preferred stock, and each right will become exercisable to purchase 1/10,000th of a share of Series A1 Junior participating preferred stock. Par value again at 0.001 per share at a purchase price of $30. So for $30, you can purchase 1/10,000th of an A1 preferred stock. So if you had $300,000, you could purchase one of these A1 preferred stocks. And this portion of an A1 preferred stock would give the holder, therefore, approximately the same dividend, voting, and liquidation rights as would 1 share of common stock. Prior to exercise, the right does not give the holder any of the dividends, voting, or liquidation rights. So let's go ahead and talk a little bit about this distribution date. So 10 days following a public announcement that a person becomes an acquiring person. So again, acquiring person is someone who obtains 10% beneficial ownership of the company by purchasing 10% of the common stock. That would actually trigger this distribution date, and that would occur 10 days after the announcement. One type of situation or scenario that would not be included in this distribution date would be if the company decides to repurchase common stock, and then that actually pushes someone that may be a 9.5% owner into a 10% ownership. Because of the common shares being reduced, that would not trigger a distribution date. The second item, and again, this distribution date is the earlier of the two, the second item would be after a tender offer or exchange of offer on behalf of any person that if which they received it would become an acquiring person. So again, if there was an SPA involved and a specific group or person due to the SPA receives 10% or more shares of the common stock, then that would again trigger a distribution date. So just want to kind of bring up the two scenarios in which a distribution date would occur. Again, we already talked about the expiration of rights. So this is good from May 1st, 24 to May 1st, 25, and the record date is May 13th, 24. So the two types of triggering events that would happen after this distribution date would be a flip-in event and a flip-over event. So the flip-in event would again be if this acquiring person obtains 10% ownership of common stock. What is really nice is that everyone else except for the acquiring person, so anyone that has this right, which anyone on record date of May 13th is going to have, they are going to have a value equal to 2 times the purchase price of the common stock. So in essence, everyone's going to get double the amount of shares that they're holding as of that record date. So that's actually pretty exciting, meaning you can basically double your share count depending on what you have in the event that one of these individuals obtains 10% ownership. And at the same time, because of that situation, this person would actually only end up with 5% of the common share count of that time. So they would no longer have a 10% controlling interest. They would be down to 5%. The second situation, which would be a flip over event, this has to do with a merger. So if the company mergers with another company and the common shares of Mullen Automotive were to change over to the other company, or vice versa, whichever company is the surviving company in terms of common shares. One thing to note is that people that have this right, shareholders that have this specific right, they will have the right to receive upon exercise of their common share value 2 times purchase price. So whatever the purchase price for their shares would be, if the shares were going to be basically purchased at market due to a type of merger, each shareholder that has this right is going to actually get 2 times the value. So these are 2 really good examples of how Mullen Automotive is looking out for the shareholders in the event that there is any beneficial owner. Again, every shareholder is going to be receiving double their amount of shares. And then in a flip over event, in the event that the shares are going to be getting sold, each shareholder is going to get twice the value of whatever the price is. So again, all that has to be taken into account whenever this new person or group would be interested in basically buying out and creating a merger with Mullen Automotive. So there are a couple of other scenarios at which this shareholder right could actually change. And this was written in, this is one of the clauses, this is a redemption clause. So at any time prior to a person becoming an acquiring person or the expiration date, meaning May 1st, 2025, the board may direct the company to redeem the rights in whole, but not in part, which means they would have to basically take away these rights for all the shareholders of record. And they would do this at a price of 0.001 per right. So it'd be a very small amount of money or a small amount of shares that would get added to each shareholder in the event that the company decided to perform a redemption. And again, this would terminate all of the shareholder rights agreement except for this 0.001 redemption price. So this is just one of the additional lines that Mullen has in this rights agreement, which would basically just nullify the entire thing, but it would pay out shareholders of record at least this fraction amount of price. A couple other things to mention is they talk a little bit about the tax considerations. I don't want to go too much involved with that. If you are interested, you can definitely check that out. And then they talk a little bit about some of the other amendment of the article. So they went ahead and added this rights agreement as well as the Series A1 Junior Participating Preferred Stock into their bylaws. So it's another thing that got added into here, and this 8K kind of notified about that. And then you'll see the 2 exhibits down there, 3.1 and 4.1. We're going to jump into those. I'm not going to go over everything. I'm just going to kind of breeze through and go over a couple of the high notes. So starting with exhibit 3.1, you can see up on the upper right, this is the certificate of designation of preferences and rights of Series A1 Junior Participating Preferred Stock. So this is a new type of preferred stock offering that Mullen Automotive is now going to be offering shareholders. It is going to be starting out at 50,000 shares. And then it does have a designation amount. It says there in that clause that Mullen can add additional shares to this specific type of preferred stock, but they cannot decrease the number of shares. So there'll be a minimum of 50,000 available. I guess depending on how much interest people have, Mullen could definitely increase this in order to continue to provide this opportunity for shareholders. All right, and what you get with this preferred stock, they talk a little bit about the dividends and the distributions. So you can see the subject to the rights of the holders of this series preferred stock, you do receive quarterly dividend payments equal to or greater than, depending on which of the two, you're either going to get $30 for each of those Series A1 Junior Preferred Stock, or you're going to get 10,000 times the aggregate per share amount of cash dividends, or a subdivision of outstanding shares of common stock. So that's pretty interesting. So if Mullen ends up announcing a specific dividend to all shareholders of common stock, anyone who has this junior preferred stock is going to get 10,000 times the amount. So that's pretty incredible. It's pretty awesome. We're going to talk a little bit about exactly how much it costs to purchase one of these, and how many of these purchases would it take to have a whole preferred share, because they do allow you to own a fraction of this preferred share. And then you'll see some other sections. I did not go through all these other sections. Has to do with the voting rights for anyone who owns this type of preferred share, certain restrictions, reacquired shares, liquidation, dissolution, or winding up, consolidation, a merger, etc. Talk about a no redemption clause, certain ranking, how does it rank up against the other preferred shares, and then of course common shares. If there's any type of amendments, there's a clause for that section, and then they talk again about some fractional shares. So there's been a lot of discussions in terms of what exactly this right is. I did read through the exhibits, and I believe I have an understanding. If you do not agree, please leave a comment. Let me know what you think this is actually dealing with. But I will share from the actual filing itself what it says it means. So again, this is talking about the May 1st, the rights dividend declaration date. This has to do, again, with this shareholder rights agreement. You can see this on the left-hand side, right above where I am filming. It says the rights agreement between Mullen Automotive Inc. and the Continental Stock Transfer and Trust Company. So they are the ones they are the agents for this specific right. So what is this right and who gets it? So this is declared as a dividend distribution. Again, this is of one right for a common right, and then they also mention this is one right for a preferred right. And the record date at which you have to be holding your shares is May 13th, 2024. And then it talks a little bit about each one between the common and the preferred, and the last sentence is something that I want to read. I'll start at the part that's underlined there, section 22. The earlier of the distribution date and expiration date, each right initially representing, here it is, the right to purchase a share of preferred stock or a fraction thereof as applicable upon the terms and subject to the conditions hereinafter set forth. So this right that each shareholder of record on May 13th is going to have the ability to purchase one of these A1 Junior Preferred shares. So it goes into a little bit more detail in the rights certificate. You can see that for a purchase price of $30, you can get 1/10,000th of a share of preferred stock. So this, again, this has to do with this Series A1 Junior Participating Preferred Stock. It's listed there in this right certificate clause. And then it does talk a little bit about the flip-it event and how those would have the same type of protection that was mentioned in the prior filing in terms of basically getting two. So I think this is pretty exciting. This does allow the shareholders to have an opportunity to actually get a preferred share or a fraction of a preferred share, which again would have the opportunity to get quarterly dividends in the future. So again, that $30 quarterly dividend would be for a single share of this A1 Junior Preferred Stock. So if you think about it, for $30, it's 1/10,000th. So for $300,000, that would be the cost. That would be what it would take to obtain one share. But again, you don't have to have one share to get the dividend. You will just get a fraction of that dividend. Or if the company decides to provide dividends to the shareholders of common stock, again, you would get, if you have one share of the A1 junior preferred, you would get 10,000 times that dividend payout or distribution. So it's a pretty good thing. I think it's really cool that Mullen is providing some of these additional preferred shares. Again, as they start to grow the company, as we start to see them becoming profitable and getting more revenue on the books, and really scaling up production so that their profit can actually outweigh their cost of operations. The company is going to continue to grow, and it's awesome to think that as an initial shareholder, you have the opportunity to get yourself some preferred shares as well. And again, you have until May 1st, 2025 to make the decision if you'd like to purchase these preferred shares. Again, there's 50,000 of these preferred shares for these A1 junior preferred shares. And Mullen and the board, they have the opportunity to increase the number of these types of preferred shares, depending, I guess, at their discretion. Well, that wraps up for me, folks. I hope you enjoyed this video. Hopefully it wasn't too confusing. There is a lot more in those filings. I would definitely suggest that you go ahead onto the SEC website and pull them up and really read through them all. I just kind of took what I thought were the high-level notes and tried to do my best to explain it. Hopefully I didn't confuse you more. If you did like this video, please consider giving it a like. Please subscribe if you haven't already. And again, leave me a comment. Let me know what you thought about my explanation of this rights agreement. Let me know of any other future content you'd like to see or hear about. And again, I am not a paid representative. I don't work for Mullen. I receive no commission of any type, no compensation. I am just a mere investor who is extremely bullish about Mullen Automotive and what they have going forward in their operation side of things. And with that said, I hope you all have a great rest of your day, and I'll see you on the next one.